Well, I want to welcome all of you as well. Thank you for being here. Just a show of hands, how many first years do we have here? Oh, look at that, Bill. They're looking for an internship.
Resumes at the back, right?
Well, for the first years, I just want you, you maybe already know, but this is our WL Mellon Speaker Series. This is our opportunity as a school to host some business leaders, successful business leaders, and we're very fortunate when we can bring back one of our own alumni. So welcome, Bill. Thank you for being here.
Thanks, Bill.
It's great to have you. This is just going to be a conversation between the two of us. We will talk for maybe 20 minutes or so, and then we'll open it up for questions from the audience. Okay? So let's get started. Digital Realty. Can you kind of give us a sense, because I'm not sure everybody in this room really knows and understands what it is you do as a company. So can you just give us a sort of a background on what the business model actually is? And should we be thinking of the company as a real estate play? Is it a cloud computing play? Is it a digital play? How should we think about Digital Realty?
Sure, thanks. And all of the above, by the way. First of all, thank you for having me. I started my career as my executive career as CFO, and my finance professor at SMU was this fellow by the name of Bob Damon. And I have to say it was the most enjoyable course that I had there, and I've told him that before. So he was a great professor, and I'm sure he's an even better dean. But thanks very much for having me. It's good to come back to Pittsburgh. I was born and raised here, and it's happy to come home. We are, first of all, we're organized as a real estate investment trust. And to be a real estate investment trust, you need to own and operate real estate. So that is what we do. Now, we happen to own data centers, which is what I would call technical real estate. Our buildings house servers, and our customers, clients, are all the major technology companies, cloud service providers, major banks, social media, autonomous driving, ride sharing, you name it. And we have public filings that show our top 20 customers, and they're all companies that you know quite well. We started this business in 2004, and it was a public company. We actually started in 2001 as a private business. It was in answer to a RFP that CalPERS put out, looking for a firm to invest at the convergence of real estate and technology. So, interesting question. I would say it's both. And we've had a phenomenal growth. We are partners to the cloud. We support the cloud. We enable the cloud. We also enable the digital economy, because all these firms locate inside our data centers. We create ecosystems on very large campuses that allow enterprise customers to connect to 4 or 5 or 6 cloud firms. We call it multi-cloud. But it also allows them to keep sensitive applications on their own servers. But they can do all of this without going out on the public internet. So there's a great deal of security in that. And I'd say that is the essence of our model, large campuses, but we have these campuses around the world. So while we're headquartered in San Francisco, our largest area for investment is in Northern Virginia. And roughly 75% of the world's internet data flows through Loudoun County, Virginia every day. So that's the reason we're there. We have a lot of investment in Silicon Valley. That should be obvious because there are a lot of companies headquartered. We're big in Dallas, we're big in Chicago, but we're in London, we're in Paris, we're in Frankfurt, we're in Amsterdam, we're in Tokyo, we're in Osaka, we're in Sydney, Melbourne, Hong Kong, Singapore. And just this week we announced that we're entering Brazil. So 5 markets down there, and we'll most likely be entering a few other countries in South America as well.
And do you own all the facilities that you use, or do you lease them? Do you build them? Do you purchase them? The servers that are inside these buildings, are these customer servers, or do you own them and lease them to the customers? How does all that work?
So we don't own the servers. That's that's easy. That's owned by the customers. Those tend to go obsolete every 3 or 4 years, and we don't want to own real estate or personal property that goes obsolete. We own land, we own the buildings. These are power-dense structures because these servers take a lot of power, and it takes a lot of power to cool the servers. So we own backup generation. One of the things we provide is security, physical building security, but also if the power from the grid goes down, our data centers have backup power, and they click on and they work even if there's a major hurricane that'll shut down the grid for a week. And we have some interesting case studies on that. In general, we own the real estate, but in certain markets, we lease, or the companies we've bought lease. So, for example, the company in Brazil that we announced this week, a joint venture with an investment manager by the name of Brookfield, leases all of its assets. Now, in the future, we would hope to own, but currently they lease.
And your business model, if you were to compare that, say, to some of the other firms in the industry, how are you differentiated? And is this a business that is very price sensitive? What is it? How is it that you differentiate yourself in terms of either pricing, service, location, to attract the customers that you attract?
I would say it's first and foremost on the basis of scale, so global footprint. That's very important to our customers. And then it's the range of product offerings. So we can sell the smallest cage or cabinet to a customer, 5 or 10 kWs, up to 25, 30, 36 megawatts, massive installations. And no one else can do that. I would say I think every business is somewhat price sensitive, but I think that customers are willing to pay a premium to locate in a digital facility, which is known for its reliability, and to locate on a digital campus, particularly if they are there and they're expanding, because when you come onto a data center campus for the first time, there's quite a bit of initial investment, primarily related to network. But once that's in, it's in. And so with an expansion on that campus allows the customer to take advantage of existing infrastructure that's already been installed and purchased by that customer.
You mentioned power and energy as being a major cost for this business, which I guess means location is important in terms of energy costs. So can you speak a little bit about that in terms of how it relates to your business and its cost structure, as well as what kind of renewable initiatives do you have ongoing as a company?
Sure. So for our customers, total cost of occupancy is really what they look at. So it's not just rent, but it's power cost. And our customers, in general, pay the power cost directly. So that's also another reason why Northern Virginia is such a desirable market. Power costs in Northern Virginia are about 8 cents a kilowatt. Power costs in New Jersey are around 13 cents a kilowatt. So to the extent that an application isn't terribly latency sensitive, and say it's a financial services company, they're more likely to go to Virginia than New Jersey. They'll go to New Jersey if it's latency sensitive, meaning a trading application. But in general, they'll take the area with the lower cost power. Another example would be the Bay Area. So within the Bay Area, a tremendous number of data centers are in Silicon Valley. Silicon Valley is actually served by a municipal power co-op called Santa Clara Power. Again, power cost is 8 cents. The power company in San Francisco proper is Pacific Gas and Electric, PG&E. Those power costs are in the mid-teens. So again, the firms would rather be in Silicon Valley than in the higher cost area of San Francisco proper, unless it's a enterprise that's located in the city and they simply want to walk across the street to the co-location facility. Now, with respect to renewable power, I became CEO in 2014, and one of my initiatives at that time was sustainability generally, but renewable power specifically. So we hired someone to run our renewable power efforts, who was actually a Carnegie Mellon graduate. I won't say that's why we hired him, but I do like CMU grads. And he's done a fantastic job for us. And among the data center players out there, we are by far and away the largest user of renewable power to power up facilities. And that's important to us. So for our co-location facilities, we actually pay for the power, and then the price of the rent is marked up to reflect that to the customers. But even the customers that are paying for power directly, the larger customers, the large tech companies, as you can imagine, they're very keen to use renewable power. In fact, some of our customers have leveraged our skills in that area to buy renewable power for themselves. And we're happy to help them and work with them.
Yeah, great. We talked earlier about how this company, your company, has grown so dramatically under your leadership. A lot of the growth that you've experienced has been through acquisition. I don't know what the breakdown is, and maybe you can speak to that. But is the acquisition is it an actual strategy for growth for the company, or is it done more opportunistically? How do you go through the thought process of deciding to make an acquisition versus just building on your own? And if you do acquire, are there synergies between what you're doing and one that you're buying, and what would those synergies be? What would it be the nature of those synergies?
So it varies in each instance. Now, so I'll work through various examples. So as I said, when I became CEO in 2014, we made our first, what I would call, significant strategic acquisition. We bought a company called Telex. Up until Telex, we had been in the large footprint space and power business. Telex was in the co-location and interconnection business, so small footprint, connecting customers within a lot of our data centers, actually. So we bought Telex. Telex is the #1 interconnection player in New York City, in Atlanta, in Chicago, and numerous other places around the country. And that was, because it was strategic, it didn't have the same cost synergies that you would see in sort of a business that we were already in. And these were new skills. We obviously could eliminate headquarters staff, but we needed their salespeople, and we needed the people that they had to operate their facilities. And I would say, when we've made acquisitions, we see everything because of our size. Everything's shown to us, but I think the first question is it strategic? Is there a strategic rationale for doing this? So in Telex's case, it was to get into a new product. The next year, we bought a co-location business in Europe. So business just like Telex, but it was in Europe, not the US. And we had a choice. We could have built out the Telex platform in Europe, but that would have taken 3 or 4 years. By buying this platform, we were up and running immediately. So that's what we did. The next year, we bought a company called DuPont Fabros. It was a public company, stock for stock exchange. It's the largest deal we've done. It was $7+ billion. And DuPont was very big in hyperscale, so large footprint cloud, big in Virginia, where we were. Their campuses were right next to ours, big in Silicon Valley, big in Chicago. That had a lot of synergies because we were in the same business. It was a fairly straightforward integration. It also had significant revenue synergies because we were able to work closely with their customers to not only expand them on what was the DuPont campuses, but to expand them on new campuses of our own. Most recently, we announced a joint venture in Brazil, and that's with a firm called, our joint venture partner is an asset manager based in Toronto by the name of Brookfield. Brookfield owns the World Financial Center in Canary Wharf, but more importantly, they've been in Brazil for over 100 years. They're big players in infrastructure, and our investment is going into their infrastructure fund. So you asked, are we real estate and technology? I might argue we're actually IT infrastructure, similar to fiber and cell towers. But I think that we also do grow organically. So we're big developers. We spend well over $1 billion a year to build facilities around the world, major campuses. So it's both through acquisition and development.
Okay. The industry and your company in general seem to have really huge tailwinds right now. Growth in revenues and profitability are way up, and market cap is up. Do you see that continuing for any length of time moving forward? And if I were to ask, what were the 3 biggest challenges you might face in the next decade? What would they be?
So I would say every quarter for the last half dozen years, I'm asked what inning we're in on the demand curve, and I keep answering third inning. So I think we're still very early stages in terms of not only cloud adoption, but there are other demand drivers that are coming behind cloud. And Carnegie Mellon is helping to generate this demand. It's it's artificial intelligence, it's Internet of Things, it's autonomous driving. So you have some people that teach at this university and do research at this university that are very much involved in those areas, and I think those will be significant demand drivers for us in the future. But the cloud adoption is well, it's certainly greater than it was several years ago. There's still a long ways to go. More so in a place like Brazil, by the way, than the US, which is why we're there. And probably more so in Europe than the US, which is why we're invested there. So I think we're still early stages. The demand drivers, I've been in the business world for quite a while now. I graduated from CMU in '88. And I've never seen demand drivers in any business that I've been associated with like this. It's phenomenal. The risk to the business over the next 5 to 10 years, so this is a capital intensive business. And in any capital intensive business, oversupply can be the enemy. That was true in the steel mill here in Pittsburgh in the 80s. It's been true in the airline industry. It is definitely true in real estate. We've had, oversupply in downtown office in various markets around the world. So that is certainly a risk for us. Now, having said that, demand has outpaced supply in all these markets. So that's the good news. Now, that's the question. When does supply catch up and overtake demand? I don't know right now, because the cloud company's appetite appears to be insatiable for space. But I will tell you that supply is certainly something that you always need to look at, and that's market specific too, by the way. So there are some markets right now that are probably oversupplied, but the supply is being absorbed. Another risk that we have is because it's really such a hot space. I would tell you that private capital is somewhat late to the party, but the private capital has come in, or is trying to come in. So there's another supply and demand imbalance, and that supply-demand imbalance is labor, skilled labor, at everywhere in the company stack. Because it's a relatively new industry, there simply is not enough skilled labor to attach to the capital that's looking for skilled managers. Those could be capital allocation, those could be financing people, those could be even data center managers, design, build, construction. Anybody that has, sellers, salespeople, anybody that has anything to do with the business is in high demand today, because there are a lot of capital providers, large private equity firms, that want to get into the space.
Yeah. Let me switch gears a little bit and ask a little bit about your career. Princeton undergrad in
Classics.
In the classics.
Greek and Latin.
Okay. Really prepared you well for where you are now.
For what I'm doing now, correct. Directly relevant.
And then a law degree.
Correct.
Did you then go and work after your law degree from Pitt?
I did.
For a local company?
Well, yes. So actually, when I was going to law school, I worked in the DA's office, criminal prosecution. Again, relevant for what I do right now. The good news is I know the difference between right and wrong, and I know what happens if you go down the wrong path. And then I actually went to work for my father's firm out of law school, who had a insurance defense practice, so litigation. So I did trial work for 3 years. My first day after passing the bar, I was in Greene County, Waynesburg, a one-judge courthouse, trying an auto case in front of a jury.
Well, I thought you also worked here in town for Duquesne Light, maybe for one, maybe Westinghouse, or?
Both. I started out with Duquesne in the law department, switched over to do corporate work there, corporate legal work. They were involved in a large construction program, nuclear power plants up and down the Beaver Valley 1 and 2, and out in Ohio. So I learned a lot about financing as a lawyer, switched over to the finance side there. And then I joined Westinghouse Credit, which was probably the GE Credit equivalent of Westinghouse Electric. I joined on the real estate side, which is how I got into real estate, was putting money out the door in various deals. My first day on the job there, I was out in San Francisco calling on a company that I formed a partnership with that eventually I went to work for as a CFO in San Francisco. And I was drafted to go to Westinghouse Electric 3 years into credit to help them with their restructuring/workout.
So what motivated you to get your MSIA degree or MBA now?
Well, so even when I was in college, as a classics major, I had 3 career choices. I could teach Greek or Latin, in prep school or college. I could become a minister or priest, or I could become a lawyer. And I was thinking about business school when I was in college, but I felt that it would be easier to go from law to business, and that what I learned as a lawyer I could apply to business than the other way around. So it was always in the back of my mind that I was going to go to get a business degree. I don't know if you know this, but I actually started out at Pitt in their night program before CMU had their flex program. So I started at the Pitt night program 1 year before GSA announced their flex program, and as soon as I saw the letter that they were launching the flex program, I was on it.
Yeah.
And it was the best thing that ever happened to me.
Yeah. Well, it's been quite good for us as well, given your success. So
Well, thank you.
thank you. Talk about your sort of during your careers, looking back. You know what? Can you sort of identify points throughout your career that were sort of transition points or really acceleration points? And how did you get here from there? What kind of decisions did you make along the way?
Certainly not a straight line or a freeway, as we have in California. Well, I would say when I was doing trial work, I knew after about a year that I didn't want to spend my life as a trial lawyer. There aren't very many old trial lawyers. It's a very stressful existence. Try to find a trial lawyer who's over 60. So, and I really did want to do deal work. I'd like doing deals. When I was in law school, I took a bunch of deals, commercial real estate transactions and business transactions. I just didn't know how to get into it. I didn't know how to enter the space. So, I mean, Duquesne Light was the entry point there, and switching over to finance there was huge for me. And someone that was very helpful to me in getting to that spot was the CFO at the time, Wes Von Schack, who became the CEO. He might have even been on a CMU board at one point. He was on the Mellon board. And then, I think obviously going to Westinghouse Credit from Duquesne Light. So Duquesne Light was a conservative career path. It was low beta, as you would say in business school. Low volatility. Westinghouse Credit obviously had a lot more volatility, but I decided to take the risk and move over there and became a deal guy. Put money out the door, deal originator. And I enjoyed that a lot. But, the S&L crisis happened and Westinghouse Credit basically shut down after 3 years. And I was asked to help solve their problems from headquarters. I think the next major move was moving from Pittsburgh to San Francisco. I was born and raised in Pittsburgh. My parents were born and raised in Pittsburgh, so deep roots in this community. I always liked going to San Francisco for business. If you were to ask me what were the 2 cities, my wife actually asked me at the time, so if you couldn't work in Pittsburgh, where would you work? I said San Francisco and London. So I received an offer from a client out in San Francisco, and I went to work from the CFO. It was such a stressful move that my wife at the time asked me, she said, well, did you talk to any companies in London? After I received the offer from the company in San Francisco. And I said, no, we're going to San Francisco, honey. So big risk, but San Francisco is a very fluid business community. There's a lot of upside. It's a great place to live and work, and I enjoyed it a great deal. So I think that was definitely a pivot point. But then joining GI Partners, the private equity predecessor to Digital Realty Trust, was a major inflection point too. As I was there pre-IPO, we took Digital Realty public. And then I think the final inflection point was when the board gave me the opportunity to be the CEO at Digital in early 2014. I was interim CEO for 7 months while they did a search, and the company responded well to my interim leadership, and then they asked me to take the job on a permanent basis. I say permanent, but CEOs are never permanent. We serve at the pleasure of the board and the shareholders.
One more question, and then we'll go to the audience, which has to do with leadership. Can you sort of speak a bit about your leadership style, how you manage people, how do you motivate people, and how has that changed over your career, the way in which you approach the management of individuals and of people?
Sure. So when I spoke to the smaller group earlier today, I said that when I took over as CEO at my first management meeting, I said to my former colleagues, and now my direct reports as of that day, that the First Amendment, as a lawyer, you're talking legal terms, the First Amendment was hereby reinstated at Digital Realty Trust. So all of you have the right to speak your mind and tell me what you think, which was not the case under prior leadership. But I said, commensurate with that right, you also have the obligation to speak up. So we're going to sit around this table, we're going to talk about a lot of topics. And if you disagree, you have an obligation to bring that to the table. Because we're going to make a decision at this table, and when we walk out of the room, we all need to be behind that decision. So that was the first thing I did. I would say collaboration, teamwork, which by the way, I think CMU was a major contributor there in terms of understanding the importance of that. You don't do the teamwork, case study work in law school, but you definitely do it at CMU. Yeah. Transparency and communication. So with your direct reports, with your employees, with your investors, with your board, and setting expectations. So, one of the things we've done at Digital, and we're probably known on the street for that at this point, is under-promising and over-delivering. Some people call it sandbagging, but it's worked out well. I mean, our mantra with the quarterly earnings, what we like to do is beat and raise. You beat your quarterly earnings target, and you raise your guidance, and it tends to result in your share price performing over time.
They don't catch on.
Well, actually, they do. So what happens at some point, analysts stop doing the work, and they just take your guidance and they add a nickel to it because they know you're going to beat.
Exactly. Okay, let's go to the audience. Anybody out there with a question for Bill? Yes.
Jack Gazio, first year. As a CEO, do you view a company like AWS as a competitor?
I've heard that question more than once, and especially when they first came out. They are a customer. We typically don't disclose the identity of a customer. All the CSPs are customers. They're an important customer. So I don't see them as a competitor. Now, I will caveat that by saying, in terms of small footprint colo, I think startups that used to go into a small footprint colo environment may go to AWS. However, AWS needs to put their data center footprint someplace, as does Microsoft and Google and IBM and Oracle and SAP and Salesforce. You kind of go down the list. And fortunately, we've gotten a pretty good share of all that business.
Yes.
Shankar Bardwaj for Sheer. Thanks for coming to speak to us today.
Sure.
My question is more around, you alluded to the fact that you guys just expanded down to Brazil. But strategically, are your next investments for the next 5 years going to be more into the networking side of things and improving? You discussed latency at one point. Is it more around the networking side of things, or is it actually, building new data centers around the world?
Look, I think we're going to continue to build data centers around the world. Interesting that you should ask the network question. In this Brazilian deal, we actually bought network. We bought fiber and network, and it's the first time that we have bought network. Now, the difference between network in Brazil and the US is that there's a paucity of data center or network providers in Brazil. So when Chris Tordo, the CEO of Ascenti, signs up a customer for his data centers, he's also signing fiber deals. And that becomes a moat for him, a competitive moat. In the US, there's while fiber's filling up, there's still plenty of choice. So to answer your question, I think it would depend on the region. If there are, we've positioned ourselves in the market as network neutral. So we enable our customers to connect to the network of their choice. Those networks are inside our data center. We feel the same way about cloud. We're cloud neutral. We're Switzerland. We enable our customers to conduct their business.
Okay, others? Questions? Yes?
Tom Reeves, I'm a second year. So you talked a lot about the need for energy and cheap electricity, and you also mentioned a lot about renewables. Have you guys considered industrial scale batteries to power your data centers? And if so, or if not, can you talk through some of the reasoning behind it?
I'm sorry, get what to power our data centers?
Batteries.
Oh, batteries, yes. So we have a pilot project in Connecticut with a company called Bloom Energy. If you know anything about batteries, you may have come across Bloom Energy. It's a fuel cell business, and they came public, I think, just recently. So we have Bloom in a couple of our facilities, and I'll tell you though, the batteries today are not a primary source of power, but they are backup. And they're backup in the sense that if the power goes off in our design, batteries click on. And they stay on until the big generators are fully fired up, and then they kick in to power the data centers. So we have an R&D group within our company, and we look at that issue, and as I said, we have some pilot sites, but we don't think we're ready yet to roll that out as a primary power source.
Okay. I think, yes.
Brian Connolly, a second year. So being in such a fast-growing industry that it's very competitive and a lot of innovation is occurring over the past 10 years or so, what have you done as a leader to make sure you're staying in a good position within the market so that you can remain competitive when there's so much change happening?
Yeah. So it starts with talent, and unfortunately, when I became CEO, I had to change out most of the people that reported to me. It didn't happen immediately, but it has happened over time. So the only direct report that I had at the time that I became CEO that I still have today is the general counsel. So it's getting the right talent. And so we have a chief technical officer that came in who has under him R&D, design for the data centers, something called sales engineering, so the technical support for our sales team, solution architecture, so figuring out what applications are going into these data centers works closely with sales engineering. And I think that has worked out quite well. He also has interconnectivity under him. He came out of Equinix, one of our competitors. And so we have a team of, I'd say, very sharp individuals that work under Chris. And we hear from Chris. I hear from Chris every week. Our team hears from Chris every week. We have people that work for him that come in and present to us on a regular basis. And we certainly try to stay abreast in terms of technical innovation, if that's your question.
Yeah.
Hi, Michael Poach, second year. Michael Poach, second year. So many emerging technologies like Internet of Things and autonomous vehicles propose the concept of edge data centers that bring the computing equipment closer to the facility. Seeing yet potential growth and need for smaller, decentralized facilities, how does that impact the way you are envisioning growth and where you're going to build future facilities?
So we are, first of all, of the view that all of that data that's being sourced at the quote edge, which is sometimes referred to as fog, by the way, because it's not clear exactly what it is, goes back to a large compute engine to be analyzed. And that's what we own, are these large compute engines. And I think with when 5G rolls out, that's going to move even faster. So maybe the edge doesn't need to be quite so far if the data is traveling faster. The other part of that is that we, from the outset, had what we call internet gateways, but they're very network dense facilities located in metropolitan areas. And if you think that the edge is about being close to consumers, which we do, rather than being out in the farmlands, which sounds like a geographical edge, but it's all about latency. We think actually owning the metropolitan center city-based network nodes that we own is the edge, at least for urban dwellers.
Yeah, let's go here. Yeah.
Was there a point earlier in your career where you really had the desire to be the chief executive? And if so, at what point did you have the realization that you have what it takes to do that job successfully?
Well, I think it's natural to want to progress in your career, and so I actually was CEO of a very small startup during the initial internet boom in the early 2000s. It didn't amount to anything, but it's great fun to run something because you have all the levers at your control. And you're setting the strategy, you're executing against the strategy, you're adapting real time, you're sourcing the resources, whether they're human resources or capital, in order to execute against the plan. So it's an incredibly fulfilling experience, and I would recommend it to any of you that have the opportunity. So when did I think I could do it? Well, when you're sitting as a CFO partner to the CEO, I think it's probably fairly natural to think that you can do it at that time. And I was the CFO of a REIT in '95 that I moved out of San Francisco for, and ended up as the president of that REIT. And then of course I was the CFO and Chief Investment Officer of Digital. So I would say that you know, if I think about what I didn't know when I became CEO, look, I knew finance, I knew law, I knew capital allocation. I wasn't a sales guy. I'd never worked in sales, although you could say if you're doing investor relations, you're selling the stock. But I didn't sell the product to the customers. I wasn't a product management, product development guy. I wasn't an operations guy. I never operated a factory or anything like that. I wasn't an engineer, so I wasn't technical. I majored in classics, for heaven's sakes. But what's important in that situation is that you surround yourself with people that know those areas well, that you can trust. And you listen to them. You know, you talk about things as a team. You talk with them. You process. You synthesize, and you make decisions and you act on it. Because you can't. It's hard to have had the experience with everything. I mean, you know, honestly, some companies are really good about rotating executives through various leadership positions and various functions. But if it's a small company, that probably is less likely.
We have time for one more question. Yes, one more question we have. Yeah. Yes.
Hi, William First here. So from what I understand, your company is more focusing on the infrastructure as a service kind of service model. So do you see business opportunities in more upper level, such as PaaS or SaaS? If so, do you have plans accordingly? Thank you.
Yeah, I mean, actually, the applications that are in our buildings, the customers that are in our buildings, I think software as a service is the largest growing piece of that. You know, some customers are named in our filings, some aren't, but let's just say that there's a lot of SaaS in our buildings. Yeah, obviously there's IaaS, that came first. And there's platform as a service. I think it's all three. But I actually believe that software as a service is potentially the fastest growing of the three for us.
Okay. Well.
But by the way, network as a service, or software-defined networking. You didn't mention that, but that's important. We're invested in a company called Megaport, and we have Megaport's routers, if you will, in our facility. We've got something called Service Exchange. It allows our enterprise customers to basically go up on their computer screen, if they're a customer of ours, and click on the cloud service provider that they want to use. It's no longer a hard fiber connection. So that's very interesting. And carrier too, fiber carrier.
Well, Bill, thank you so much for being here. Again, congratulations on such a great career.
Well, thank you.
We're glad that you agreed to come back and speak to our students, and I'm very pleased to have you back in this facility versus the one that you attended many, many years ago. Again, congratulations and thank you. We have a small token of appreciation
Oh, thank you, sir.
for you.
I really
There
appreciate
you go.
that.
Thank you, Bill.
Thank you. And
Thank you.
thank you.
Yeah.
Thank- I appreciate everything.